Good afternoon, all. I think today was a very interesting Monday. There's actually a lot of good movement. However, it took a while for us to really get to where I was comfortable taking positions anything near my full size. And having communicated with a lot of you today, I know there were mixed results. But there's a couple topics that I really want to speak on today. And this isn't going to be a watch list video. I think, honestly, this month and, for the next couple weeks, I just think there's going to be a lot more stuff that we need to talk about on a daily basis outside of just finding levels, right? Because a lot of these plays are happening intraday and we're getting range movement, or big range movement in both directions in the same day, and it's coming at times when this usually doesn't happen. Why are we getting a massive flush around lunchtime, right? This just isn't normal, right? And this is a 1.3% top to bottom move, trap, bull trap right here, and then a subsequent, another 2% move. So we have this move up here, and honestly, I didn't catch any of this move. I don't think I even played options on any of this move. I think maybe I took some shares, but I was going small size on pretty much everything. I just wasn't feeling it. So I want to show you sort of how I looked at the beginning, and I was trying to give a little bit more um, of my thought process on, okay, how are we thinking about the theme for today, because that's been so important recently. It's just, what is the theme going to be for this day? Because once you can identify the theme, you can formulate your plan and your rules around that theme. Because for me, my rules are a little bit different based on the theme of the day. So for example, if the theme is going to be, hey, we're range bound, and I'm just going to have to be, if we're range bound and I can clearly tell that there's really not a certain trend. Maybe there is sort a semi trend in one direction, but it's still, a $1 range or something, or $1.50 range on SPY. Then I know I'm gonna have to be buying. I'm gonna be buying the dips, selling the rips. Selling the top, and covering my short, or getting rid of my um, puts on the bottom, right? Just of their range, and that's what we need to be identifying, right? Because once you can identify these things, so here we're saying, okay, we're consolidating and then breaking out, consolidating, breaking out. Okay, broke down. Now we're back on support. Okay, how do we get below that support? Like, what happens when we get below it? Okay, well, we're continuing. So we can notice that there's just follow through coming in this day, and we can say, okay, once we do get a move into breakout territory above past highs, we're getting follow through. So if we can read that we're getting the follow through, then we can play the follow through, right? But if we're not getting any follow through, uh, then we shouldn't be noticing that and then taking breakout or breakdown plays when it's just clearly not the theme being presented. However, intraday, that can change. So just because we're getting up, breakouts, breakdowns here, doesn't mean that we're not just going to trade in a range for the rest of the day. That's usually how it is. Usually it's just here, we can make the move in the morning and then just chop around. Nothing happens in the rest of the day, but you know, there's nothing going on usually. But now we're getting this huge follow through, and this isn't. But the thing is, it's in a different direction. So two things I really want to talk about: just the morning checklist. So sort of how are we reading this and analyzing it? Um, what do I see in this? And it's not foolproof, right? There's you have to, you can't just take something because, oh, I see a bunch of upper wicks, it must be meaning it's going to go to the downside. Well, you've got an equal amount of wicks to the bottom too, um, and you've already moved in that direction. You're testing new highs, you're not testing new lows. So and then I also want to talk about how to quickly change bias and have a very short term memory. So first thing, let's talk about the checklist. So what am I noticing? First thing I'm looking, so this was the first candle of today. First thing I'm seeing, okay, where are my wicks and what levels slash trends are being respected, right? Those are the two main things here. So if I'm putting that up the screen, I can Not gonna even get rid of the EMAs. Don't need those. So again, I told myself I'm not taking a trade for the first 30 minutes just because lately what's been happening is we get super exaggerated moves at the randomest times, right? It could be 1 p.m., it could be noon. Like today, this downside move technically started an hour and a half into the market, right? So if you waited an hour before taking the next trade or your first trade, you honestly were catching the top if you took puts. So it goes to show you the full move, the move that is actually going to happen. If you take an hour and a half before even taking one single trade, you technically didn't miss out on the actual big move that's happening. Um, so all that to say, don't get FOMO and don't say, hey, I need to jump into something really quick just because it's happening, right? Like just because there's an uptrend. I mean, this is a clear uptrend. I honestly thought it was pretty strong. Um, but just because I thought this is strong doesn't mean that it's going to sustain. So I would probably put it like right there ish. And then my second point would be about right here. So going up like that, you can see, one test, two tests. You get the second test here, you can draw this line, and you notice, boom, okay, there again, there again. You actually got two or three abilities to trade that. So it worked pretty well. Again, here, up, and then once you have the trend line now, you see up, okay, sideways and then up, sideways and then up. You got to test the trend line. We're not going to take it here, but we'll take it once it hits the trend. We don't want to get chopped up. This is right here. This is horrible. I mean, I remember I sent a picture this morning in the chat. Like, you don't want to be playing this. So, as far as the checklist goes, where are my wicks, right? Where did we make new highs, lows? What do my wicks look like? What levels are being respected? So, right now we made new lows, but we wicked. Okay, so that's pretty bullish. We go up. We have this strong candle after 10 minutes. So I'm saying, okay, I would really like to see new highs being made before I look to go long. I would like to see the highs be made and then retest the highs and then bounce. That would be my ideal situation. So I don't look to take anything, given the fact that that's going to probably take a good amount of time. I was happy that with the fact that I was waiting for 30 minutes. So 30 minutes passes and we made new highs, but we didn't get any form of breakout and then retest. But what happens here is boom, breakout, breakout. We get a little retest here. Could have taken calls there if you wanted to. We get another retest here, testing these highs and then bouncing back. So to me, this says, hey, I'm leaning bullish, right? And you additionally you can draw the trend line. You can see that it's broken above high day. I mean, we have a couple points on the checklist are being checked, right? Respecting levels, respecting a trend line, broke out to new highs, and then we had wicks to the downside that were also respecting a level, pushing up into a move upwards. So pretty clear from that perspective. So next thing I'm doing is I'm seeing how well it continues to respect this, because it's very important that we have a short-term memory. We can't say, hey, this is an uptrend and this uptrend is just going to continue all day, because the market has proved to us over the past 4 or 5 weeks that it does not matter what time of day it is. It can change on a dime. It can change for 1 minute and then boom, take off and it can go green, go to the upside. It doesn't take any certain amount of time. It can do it on command. So I'm having a very short term memory, and what that's leading me to do is it's leading me to take profits incredibly quick. So I'm seeing 10% gains, I'm taking them, right? I mean, I said that in the chat, right? I'm also, if I'm seeing my positions kind of messing around and I'm in puts but it just made new highs, right? I took Micron puts today, I took actually 70p. I took 70 and I had them right here and I sold them at high. I mean, I legitimately sold them at high day. I think I had them at about right here. And then at this point, they were down about 5 to 7%. And I just said, hey, like my rule was the fact that I didn't want it to make new highs, because I knew that we could possibly get a gap fill. I didn't want it to start ripping here. up to 65, and then I'm down, what, 10, 15%. I just noticed the profile was super thin. I mean, I knew that it would be an easy move up here. And if it wanted to keep ripping, it totally could, and I would have been left behind, right? This market is unforgiving. So I took the loss here, and you see what happened, right? It just completely dumped all day. So am I mad about that? No, not at all, because that paper cut didn't mean anything to me. My next green trade probably doubled the loss there, right? If I made 15% on the next trade, which is not even my usual first scaling point, I already doubled that. And I was on incredibly small size to begin with, just testing, just dipping my toe in the water, right? That's what I would recommend right now. Your first play of the day, sort of just dip your toe in the water, right? Just get a feel for it. Get a feel for the price action. Then once you get a feel for it, you can say, oh, okay. Because if you're going small size, there's really no reason to get upset either way. You know, if you win, great, okay. You know, it's really not that green of a trade since it was small size, but hey, the confidence that I have now is a win. And then if you lose, it says, hey, it's not going to hurt your emotions because it was super small size. The loss is small. You followed your rules, didn't let it get out of hand. And the good thing is that, okay, you got a feel for the price action. Now the next trade is probably going to far surpass the loss that you just made if your trade is in fact green. So, and even still, my first two trades today were actually red trades. One was a shares play, and one was those micron puts. Right, they were both small losses, but at the same time, I mean, once we started to get this confirmation of what was happening, right, what was going on. I mean, it was just slapping me in the face that this is downfall, right? And then you can see the retest of this 420 level, which was previous lows. I mean, this is when I started hammering the puts, when it became blatantly obvious. We were testing 420, which was previous lows, you know, hot lows from Friday, right? 419.6. We noticed that these are getting tested and they're failing, like fail, 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 four fails, right? And it just, I think this is probably when I entered puts, right about here. And then it just 20 straight minutes of blood, right? And you got another trap here, boom, more. I mean, you could have done it to, 3 or 4 times, and it didn't even, it took the low of day to do that. Like, you could have missed this entire move, honestly, which I did. I don't think I played downside on any. Well, I did, but it was really small. Like Apple puts maybe 10%, and Neo puts, I think, maybe 15, 20%. But what I'm doing here is I'm just racking up these base hits, right? Because I know that it can go against me. I know that this can happen, like that a strong uptrend can turn into a downfall in 25 minutes. So if something hits my stop, or if something is up 20% and it's starting to reverse against me a little bit, I'll just exit the play and then look to enter again. And what's been happening, what that enabled me to do today was, okay, I'm exiting my puts here, right? And then I get this candle, I get a better entry on, could be the same puts or something that maybe looks weaker now. Boom, okay, right back down. So what I did is, if I'm selling this, I'm seeing, okay, it's starting to build some support up here. I'm just going to sell them, right? 10, 15% doesn't matter. Even if I bought them here, sell them down here, 10, 15%. And then, okay, you get a push back up, you get a better entry. Boom, you see it fail those highs. You see it fail again. I mean, it's blatantly obvious. So you honestly could have made more money just taking the 10% here, waiting for it to go back up here, re-entering, and then taking it back down here instead of just holding the same position, right? You made more money by taking the base hit, waiting, taking a base hit again. So at this point right now, it's just knowing that it's very important to have a short-term memory, and never being like, hey, I took green in this trade, but it went more, right? I mean, okay, yeah, I'm upset about the fact that MU went to, those would have been brutally in the money, but no, I took maybe, a tiny loss on it, and the next trade made up for it, right? Okay, but think about it the opposite way. If you had a bad day today, things didn't work in your favor, maybe you accidentally sized a little too heavily on something that wasn't necessarily working, and then you kind of got the tunnel vision thing where you said, "Hey, I think this is really going to go in my direction," and you didn't respect your stop, and then it was unforgiving, right? Then you're cutting when it's down a lot, and it's just not stopping, right? It's unforgiving. So if you ever catch yourself having tunnel vision or saying, "Hey, I really can't accept this loss," that means that you need to accept the loss and accept what's happening. Because if you get into the hope position where it's like, "Hey, well, this kind of really has to go in my direction, and I don't really get a choice," that's your cue to exit. Because if you're holding on to that and your only reason to hold is hope, then you're in for a rude awakening, because that's not sustainable. Number one, it could go in your direction at one point and then you get out. But if you keep allowing yourself to have that mentality and not respecting your stops, then it's bound to get you one of these days, and it's going to get you pretty bad, right? Especially if you ever average down or you size too heavily, right? If you ever resort to hope as your reason for staying in and you're down 30%, right? Just please just cut, right? Because it can, you don't know what's going to happen next. And like, we don't have to know what's going to happen next in order to make money, right? But the reason that we don't have to happen the reason that we don't have to know what's going to happen next is because we have a plan. We can dictate our wins, we can dictate our losses. And if we can dictate it, then we're not ever going to get in some crazy trouble just from one position. One position will never blow you up. Neither will two, neither will three, neither will four, right? It's just not going to do that if you follow your plan. And that's why it's so important to have a short-term memory right now. Be able to flip your bias. Remind yourself just on a daily basis. Remind yourself. I don't care if you write it down. Um, Write it down, post it on your computer, and say, I will have a short-term memory. I will acknowledge the fact that I can flip at any point. I can sell my calls and immediately buy puts, right? I can flip at any point, because you see right here, boom, this tip is the immediate start of the downfall immediately. So you have to prepare yourself mentally. It looks like it's holding this trend line, but once it fails, it's off to the races, right? You have to at least remind yourself, hey, this is possible. Right? Every moment in the market is unique, right? That's from Trading in the Zone too. I'm just reciting these things. Every moment in the market is unique. So you have to accept the fact that, hey, this top can be the start of a new downtrend, and you have to accept that. And you also have to accept the fact that you can re-enter. Just the same thing that I said here. I think I was playing Tesla to the downside. I mean, it was like a 12 to 15% trade every time, and I was going super out of the money, right? So I was buying probably $2.50 contracts. And maybe I was sizing a little bit heavier on these just because I really liked the trend and I liked my entries, and I'm getting moves, right? I'm getting two red or two green candles at the end of a very strong downward candle, unable to break highs again. Boom, I'm entering, and look what happens, right? It's the same thing. I cut them here, boom, I can add them here, take them again. Just take the gains and always remind yourself that you can re-enter. And if you don't have money in your cash account, that's no excuse for you to hold a position for longer. Like, you always can get another trade tomorrow, right? You can get another trade tomorrow, you can get another trade the next day. Just because you have a limited amount of cash on day to day doesn't mean that you need to suddenly not take base hits, right? Over time, you take the base hits, you're going to compound. That's just how it works. And if you're seeing stuff that's green and you're letting it go red, which is the worst case scenario, right? Letting it go red that's the worst. I mean, for that, not only is that a huge mental block, it's a huge beat down. Just it's like, oh God, I had green. I saw that on my account. It felt good. You establish that new account high, right? At least for the day. And you say, and then boom, you let it go red. It's like, oh my gosh, like not only did I not stop out, right? It's a confidence beater and it's an account beater. So don't let, especially in this market, don't let red go green or green go red, because if you're letting that happen, uh, it's probably taking it out on you, because if something had the ability to go red to green on you or green to red, on your account, then it probably had a pretty substantial move. And knowing how quick and aggressive these moves can be right now, it could have been bad, right? So that's the last thing we want. Practice, I think right now is a great time to practice setting actual hard stop losses, putting them in the actual brokerage and forcing yourself to follow them and not cancel them or modify them. Just leave the stop losses. I think that's a very important thing right now. So, what have we gone through here, right? This is, yeah, this is not a watch list video, but I think this is more important than any watch list I can give you. Um, and why? Because right now there's so much movement, and usually, so in a typical market, a watch list is going to be straight, it's going to be money, right? Well, the thing is, it's all it is support and resistance. So support and resistance is eternal. I can go find a SPY or a Tesla resistance from 6 months ago, and if it's at the same price level now, that is still probably going to get respected to some degree, right? So whether it goes up to the upside, down to the downside, it's the same level at the end of the day. So I mean, we can even look. Let's see how my levels did today, right? Um, well, I guess what I was trying to say is, in a usual market, the levels are money because you play them, kind of, it helps you find a sustained sort of trend. That's the point of the levels, right? It's to say, hey, like, this is my threshold of how I know if it's going to keep going up really, or it's going to keep going down, or if it rejects that level, we may be range bound or going to the downside, right? But right now, things are so much more volatile that we really need to be practicing identifying intraday trends, which I love about how this month has gone so far, because we've really taken a big focus on that and adapting to what's happening. So Nike is a great example here today. I didn't even touch this one, but honestly, it was perfect. If waited 30 minutes would have been my situation. And then I see right here, we get the breakdown below my put trigger, retest, retest, and then boom, it actually comes over, tests this trend line that would go from there to about here. Or we can just call it here, probably. Yeah, I mean, it's not exact because technically we don't see this candle yet, but now it looks great. At the same time, this is still just a trend. This is still a put trigger rejection. You see it wick, wick, wick down, and that's pretty money. JD, this one just gapped down, so not really playable today. This BAC had a great move here. Well, where was my trigger? Oh, this was this morning. So you really couldn't. I mean, I had this past trigger that was usable, but from the ones just from last night, not usable. Tesla, what happened? So Tesla, yeah, we could use my put trigger here, or we could have used the call trigger for a breakout here. If we wanted to, we could see the put trigger actually stood strong as a support, which was nice. We could have taken calls there. We noticed the breakdown. Boom. This starts the breakdown. We do notice there's a downtrend to some degree here. We can just kind of maybe even do that. And notice how boom, boom, and it also grabs that. And it actually gets respected here, which is cool. And then breakout, boom, retest, and then just chop. That's actually pretty cool. Glad that worked. But yeah, breakdown, right, through the level. And they can happen at any time during the day, right? At 10, 20, nothing too crazy. Micron, what happens? This level really didn't quite get respected like I figured it would. I don't know. This one was imperfect. And happens. I mean, that happens. 1 out of 4 were imperfect. Oh, well, these two were kind of washed, but 1 out of 3 were imperfect. It's really not the end of the day. These weren't the ideal setups anyways, because of the way that how far this candle was from the level. And then, I mean, this breakdown would have been pretty nice because it was just below it, and then you could have wrote it down a significant amount. Wow, high volume on that one. Yeah, not bad. So At the end of the day, the main things that we need to take from this video is, hey, how are we looking at the trends? How are we looking at the morning, the first 6 5 minute candles, right? How just what is our checklist for the morning? Um, how quickly can we draw a trend and see if it's being respected or not? Because this trend was the actually, as soon as this broke, that was the key for the breakdown. We could have put it here maybe. Um, but then as soon as this happens, I would kind of say, okay, maybe. And honestly, it's way too steep to begin with. The steeper it is, obviously the harder it is to sustain. But I like this one because it actually ended up going across three of them, and you can see this was the key for the breakdown, right? Um, Again, having very very short memory and realizing and reminding yourself, hey, this can completely flip on me in a matter of 5 minutes and start 1.5% downfall, right? Got to remind myself that I can re-enter. Got to remind myself that I'm capable of cutting this base hit, just taking the small win. Small wins, small losers, and even small wins, even smaller losers, right? If possible, because a good theme right now is we are focusing on getting the very best entry, right? If we're entering on the top of these candles and we're seeing them wick down, we're seeing the denial of 420, right? You're entering puts at 420 because the worst case scenario is it just goes above that and you cut it, or goes above it like 15 cents. I don't know. Give yourself a little bit of leeway. Don't just cut it at -2%. But if it goes -5 to 7%, you say, hey, my thesis is now invalid. But if you enter down here, -5 to 7% would be up here. And you're cutting when you probably should be adding. And then you're going to be upset that it fell on you. You're like, oh, well, I sold too early, That's why, like, for example, I entered MU puts right here. I entered them legitimately right here. I think 72.35 was about my entry. And so I was happy with that because I had seen it broke the highs here, wicked down. It came up here, made new highs, kind of very, very briefly, came back down and was wicking. And I was like, okay, I like those wicks to the upside. And this has been a very strong uptrend. I think I can easily get some sort of trend breakdown, which did end up happening, right? Thought I could get that, and that's what happened. But I'm not upset about the loss, right? And the reason I cut the loss for so small is because I knew to myself that this can happen. This can happen anytime, and it was probably bound to happen up about 40 cents, and that I didn't want to hold through that. So I saw it make new highs. That's what I told myself initially, and it made them, and I cut it, right. The good thing is that allowed me to not have to babysit. It allowed me to not have to take any substantial losses, and it kept my head in check to say, hey, like I'm fully prepared for every outcome right now, and I can continue to keep my eyes open and keep the opportunity cost. I'm not giving up any opportunity cost by staying in a different position. I have an open mind to all opportunities. So the three things: identifying what's happening at the beginning of the day, trying to identify a theme, and then building our daily plan around that, and not getting FOMO if we wait for 20 to 30 minutes. Because you clearly see that moves can happen at all times during the days right now. 2, short-term memory. Know that you can cut. And then 3, know that things can go against you. They can go for you in a very, very quick manner. So take the gains quick, take the losses quick, and then just observe. So I think I said all of those things